Okay, today we are doing a review of 5 Zacks ranked number 1 stocks to buy now in December 2025. I'm Hugh from Wall Street X, and just a reminder that most active most active funds do not beat the S&P 500, and to always do your own research, of course. But starting off their list at number 5, Zacks rank has Pan American Silver. They've scored it a C for growth, D for value, and F for momentum. They cite the Mag Silver acquisition in September that boosted its Mexico footprint, and they offer a balanced exposure to silver and other deposits, which they certainly do. They've returned 113% over this past year, and analysts are continually rating this a strong buy. It's still a strong buy, and their forecast price is 12% higher than where it trades today. Their valuation is really good, actually, at 26 PE. Especially relative to their earnings growth of 36.8%. Very, very good ratio you want to see there. It's called the PEG ratio. Dividend of 1% is always nice. We put this one as a buy, and our forecast price is 40% higher than where it is today. That's also good. We like that they have strong fundamentals, strong financials. The recent acquisition is great, and it has benefited recently from high commodity prices. We'll see if those are here to stay. The risks, though, rising industry costs, volatility in the said commodity prices, and just overall volatility for the stock as well in general. We put the risk as medium, we put the reward as high. We like this one. We've kept it a buy. Number 4 on Zacks rank list is Alcoa. They're an upstream aluminum company, and they put a score of B for value and F for growth and momentum. I'm not sure why that correlates with a buy for this, but anyways, they trade under the ticker symbol AA, and their 1-year return has been negative 8%. Analysts have rated this a buy, but their forecast price 1 year from now is 7% lower than where it is today, so I find that interesting, and I've verified that too. Their price to earnings is pretty good at 9.2, but their earnings growth is forecasted to be negative. They're forecasted to decline about 7% over the next year, so that is not great. 1% dividend, we put this one as a sell, and we're looking at a 0.03% decline for this time next year is what our forecast is. Our bullish arguments are it's undervalued. Yeah, of course it is, 9 PE. However, that's pretty in line with the earnings decline. They have a strong balance sheet, good strategic initiatives, and pretty positive signals amongst analysts. But the bearish arguments and risks, volatility, high risk, margin pressure, and obviously the earnings are forecasted to decline. That is not a great sign. We put this one as a high risk, low reward stock, so we've rated this one a sell, even though most analysts are a buy. Number 3 on Zacks rank list is Navigator Holdings. They are the world's largest handy-size liquefied gas fleet. They rated them B for value and growth and momentum scores of D. They trade under this ticker symbol NVGS. They have returned about 15-16% over this past year. Analysts are still rating this a strong buy and think it has a 13% upside potential for this time next year. The PE is like 12, and the earnings growth is forecast to be about 22%, so that is really, really good. Very strong numbers there. 1.6% dividend. We've rated this a strong buy and have put this at a 31% forecast for this time next year. Very, very strong. The key performance drivers and metrics, strong earnings lately. U.S. energy exports are up, attractive valuation for sure, and they have a new build program coming in, which is great to see. Potential risk for this one, short-term volatility, of course, that's going to come with a lot of these higher risk ones. Contract renewals, they have a portion of their fleet coming up due for their contracts mid-2026, which is going to expose them to market conditions, possibly fluctuations, and of course geopolitical events, aluminium and tariffs and all that. The risk is high as a result. The reward is also high, though, and we have rated this one a strong buy. Number 2 on Zacks rank list is Agnico Eagle Mines. They put a B for growth and momentum, and a value score of D. They trade under the ticker symbol AEM. Their 1-year return is 112%. Analysts have rated this a buy and forecast it to go up 6% over the next year. The price to earnings is 25.5, earnings growth 22.8. That's really good to see. I think that's almost a little undervalued. 1% dividend. We put this one as a strong buy and think this is going to go up 26% over the next year. Bulls are saying they're citing strong financial performance, solid balance sheet, geopolitically safe operations for the most part, growth prospects. This one has a strong pipeline of projects coming up. But bears say valuation concerns, it's like getting up there, but their earnings growth is there, which is great to see, and that always offsets a high valuation. Commodity price reliance, yes, commodity prices are high now. They might not always be, and they're probably going to be volatile in the short term. But nevertheless, we rate this stock as a medium risk, high return investment, and we like this one, and we've put it as a strong buy. And number one on Zach's rank number one list is Plains Group, or PAGP stock. Plains Group is the public holding company of Plains All American Pipeline, PAA. They have put this one as a strong buy because of its upward estimate revisions, and it's put a grade of A for value and growth and F for momentum. They've returned about 3% this past year. Analysts have rated this a hold, even though they think it's going to go up 9% over the next year. PE of 20 is pretty good, but the earnings growth is about like 3-4%. You'd like to see that higher, especially with a PE that high for a midstream company, especially the size of Plains. However, here's the kicker. They have a massive dividend yield right now at 8.2%. So we've put this one as a buy because we think this is going to go up 8% over the next year. And for strengths, strong cash flow, attractive valuation, although it's pretty high, but given our earnings forecasts, it's pretty in line with that. For other analysts, earnings forecasts, not so much. Dividend income, massive fan of that dividend. How sustainable it's going to be, don't know. Strategic growth, Plains has a lot of that going on. Risks and concerns, there is some concerns about that dividend sustainability. That's probably not going to be the case. We're probably not going to see an 8% dividend for very long, but you might see it hover over that like 4 to 6%, which is right where you want to see it. Market, industry, and performance, the industry is pretty volatile, subject to tariffs and all the geopolitical stuff going on right now. However, given their assets, given what this is, given it's a midstream company that lowers the risk, we're going to put this risk as low. The return is medium. Plains for us is going to be a buy at this time. And those are the 5 Zach's ranked number one stocks that they say you should be buying in 2025 right now. You can visit wallstreetexec.com for more content and ratings. Otherwise, have a great night and thanks for watching.